Hi everybody, and welcome to this new video tutorial, webinar, call it whatever you want. Today I will present another module that I am separately developing along with the UFO project, which has some slightly variants. But basically it's based on the same core of formulation, my own formulation, in regards to Forex. Many were the questions that I received via email regarding the fact that then after determining the strength and the weakness and the overbought and oversold conditions of each currency, and then from the currency and combining the currencies we target the currency pairs that we want to trade. It's obvious that the next step is to get into the chart and somehow figure out how to position ourselves, when it is the right moment, if to put stop losses, when to take profit, all this stuff. When we go into the chart, we usually have to have a vision of what is the trend, and that's why in a module that I built with the UFO has some involvements in trying to giving a chart interpretation, so with the graphical module. I have to say that how you do approach to charts, it's also in reason of the currencies that you are trading and the way you are making hedging. There are some situations, like I showed in my previous videos, that I strongly invite you to watch, and now in a brief I will also show something here, of course. In the other videos you saw different ways to hedge the currencies together and the currency pairs together, creating a portfolio with a balance equal to zero or major at zero. And these formulas, you can find them along the videos here and there. So I strongly suggest you, before making questions, which are anyway very welcome, to have a look on the previous videos where I do always explain something different. So there are situations where you create a portfolio in a way that doesn't matter that much when you enter the trade. There's no total high or low that you will or might get, because you rely on the combination that you put together of the more currencies, so that they start to balance themselves quite immediately, and you get always a less loss for as regard the commissions or the spread, but then you start to go in a situation around zero and then positive. So in this way, doesn't matter that much if you enter a top or a bottom, because you combine them together. When some pairs move in a direction, other they will move in the opposite. This is the way of hedging. So you get a balance that anyway goes towards positive. This is your goal. Okay, so let's go a little bit deep in what I'm about to show you today. Normally, you always saw in the very last videos, I was showing the UFO algorithm with this computation, okay, on different time frames that can recompute it immediately. So now we are in an hour. I'm showing you a full screen now of the UFO, on which again some graphical elements of the other version of UFO, which is the same of this, only with different features, as I had to clean the graphics, leaving only a few modules just to help the calculations to become more rich and precise. But there we have to get a compromise also with the CPU that is in the average we have, and computation capabilities related to MetaTrader, which is very affected also by Microsoft Windows. So it's a compromise that I cannot go too much further. So I decided to sacrifice some graphical modules, but anyway, I have the sessions of the markets and some other information. So you know this very well if you saw my previous videos in this channel. But today I would show you also a module that I am developing, is under development since a month and a half, on which I try to make some little insider of the UFO for a level of single chart, so just one symbol, so only one base and code. So it has to be applied then to 28 currency pairs, okay? And that is our goal, because let's start very briefly. The very first statement, it's a statement on which I made a test the day before that was starting well, and I could have closed in a better moment with more positive profit, but was something that was occurring during the night when the markets were ending so very unstable. And what I did, I simply decided to close. In this case, we see a kind of behavior on which, if you are not very right by hedging, you get anyway a situation on where your start point and ending point, sorry, but this is another color, is better. So you basically made this, okay? So you had some losing positions, some winner positions, and the result was equals to 0, right? Was equals to 0. You should have expected to have a major of 0, okay? So this very first bunch of trades that you may notice here in a demo account that I made for example purposes and explanation purposes had this kind of behavior, okay? Something that sometimes can happen is not, it's a situation that anyway you didn't lose. Okay, so at the end you just lost some time, maybe learning something, because you have always to learn for something that you can call a mistake, which is not a mistake, it's just a not complete understanding or not enough data to determine, so you are more guessing than trying to calculate. Okay, so this is the initial situation of the balance of this account. Okay, which of course you may notice is this one. Okay, but then what happened Then I went to bed, and then the day after, so today, at this hour, 9 in the morning, at the beginning of the London session, let me just clean up that, I got a situation that somehow, if we take a look on a daily basis, let's just recalculate, okay, on a daily basis, we see that CAD is negative. Okay, let's just assume this. That was in the morning with some different values, but anyway, they were those values, okay. And now we see if there's something that I have to change, because there is a negative position, which is New Zealand dollar CAD. Okay, so CAD is negative, and here we are selling CAD, here is CAD negative, okay. Okay, here we're buying CAD, which should be wrong. One of them is wrong, but we are selling New Zealand dollar. We think that New Zealand dollar is weaker than CAD, which is not occurring right now. This morning they were different. New Zealand dollar was extremely weak, weaker than CAD. Now the situation has compensated. Okay, so in this reading, this is the trading that I was making not very wrong. But let's start from here now. New Zealand dollar, okay, is still negative, less than CAD, so CAD is the weakest, but it's still negative. New Zealand dollar we find here against yen in sell. New Zealand dollar is negative and yen is positive. Okay, yen is positive. Then what else we have with New Zealand dollar? New Zealand dollar is in sell, is negative, and here is in sell as well, because we are buying pound GBP. So GBP is buy, and GBP is still positive here. Okay, GBP is still positive here. Here we have GBP Aussie in buy, so we buy GBP and we sell Aussie, and Aussie is negative, and GBP is positive. So positive means strong and oversold, and vice versa. Negative is weak and overbought. Then we have also yen. We are buying yen and we are selling Swiss franc, and Swiss franc is still negative. Okay. And then we are also buying yen, selling Aussie, which is Aussie in sell and Japanese yen in buy. And not only by the fact that I should have avoided to make this New Zealand dollar CAD movement, anyway, there were kind of other situations that then I read on the chart that suggested me also to attempt that trade. Okay, which if you may notice, I took a while to take it, because I took it 7 minutes after this bunch of trades that were injected at the same time, one after the other. Okay, so if I would have stopped and not made this New Zealand dollar CAD, that is an attempt to diversify my portfolio for today, I would have probably get 100% positive on this bunch of trades. Okay, so with this clear in mind, you can always go back and watch it again, the situation, what I decided, and then of course I also base it readings that were anyway leading me on a multiple time frames, and also these computations. Okay, so I didn't touch euro and dollar, okay, only these currency pairs. And if we make, just to have a snapshot of the account history, okay, let's put it here, 0, 1. Okay, we are having also this situation now that I still have to close my trades. But before doing this, I'm going to show you what I was talking about. So, what I was talking about, making an in-depth reading of the trend of each and every single pair, so 28 currency pairs we have here that we can trade, and then we have to select something based on the market performance of the day. This was what is the next step, what comes next. So let me just get rid of this, I can close it, and let's also minimize this weight. Okay, so what is this? And of course behind my face there's also USD CAD and USD CAD, but I'm not trading USD CAD actually. So what you see here, and then I will show you on a chart that I would like to explain, and you see the calculation based on the formulas of UFO. This is a UFO cross, for now I'm calling it cross analyzer. But basically the most important thing that analyzes in a mathematical based concept is the trend, or when there can be some turns, and it's always based on the same principle of the UFO, but the UFO has a vision of the whole market and provides a currency analysis. Here we are in a currency against another currency, so we are in a base quote situation, and from what comes out of the screening of the market for the day, so the balances between the different currencies, then we have to analyze the strong and the weak, or at least what they are in the relation that is based to quote, so euro against dollar, euro against yen, and so on. Okay, so let's take, for example, I was having my trades here. Let's get rid of this, and let's do this as well. Okay, so these are my trades. CAD yen. Take CAD yen, and CAD yen, I have a sell situation. Okay, actually what I have in this algorithm is just this for now, because it's under development. But basically it's a kind of splitting of the things, of the elements of a currency pair, just to be precise, that I will do anyway mentally. and the kind of equation that I built for trying to represent that process, it's something that goes very close to this and also helps me to think less and be more somehow calm in my decisions, because I have also certain things to evaluate in mathematical terms rather than just an intuition or a mathematical intuition. So CAD yen, we are having a sell situation, but we see that this is still negative, but in this time frame, in this moment, this is the situation at 5 minutes, 15, 30, 60, 240, 1 day, 1 week, and 1 month. The overall interpretation of the main trend, one time frame before, so this is 5 minutes ago, this is 15 minutes ago, this is 30 minutes ago, 60, 4 hours ago, 1 day ago, 1 week ago, 1 month ago. Okay, so we have to, because then we have to cross them somehow. And this is the 10 minutes before, 30 minutes before, and then we have 1 hour before, sorry, 2 hours before, here is 2 hours before, here is 1 hour before, here is 4 hours, is 8 hours before, this is 2 days before, this is 2 weeks before, and this is 2 months before. So this can be a kind of trend understanding of a reasonable medium term, okay? And in fact, for example, CAD yen was gaining more some minutes ago, and now had still this persistent negative situation that goes anyway towards a positive situation, because they are decreasing. This is in the previews of overall, and this is in the previews and previews of overall. So this is the addition of all these ones. So this is now, so it's from minus 138 to minus 170 to 50, minus 50. Anyway, it's going towards something. Okay, so it seems like retracing. We can analyze GBP New Zealand dollar. GBP New Zealand dollar. Yeah, buy here. Okay. And in this buy level, this is the result. And the GBP New Zealand dollar, now I see it's going from negative, positive, now still negative, and I have to read these values both horizontally and vertically. But it seems quite obvious that this is the trend of the 5 minutes. This is a kind of trend, or it's a trend at least if we see all negatives. And this is probably a second lap this way. It's all describing what is in real time, so tick by tick. Okay, so New Zealand dollar and yen, we have a sell condition, and we still sell, but it's getting some strength. GBP Australian dollar, buy, and is going negative, so it's retracing, and we see that we had 2,600, now we have 2,200 or something like that. Then we have Aussie yen, +1, Aussie yen. Which is going in a sell direction, and here is a sell line, and is still negative but getting strong. And then we have New Zealand dollar CAD, which is the big retracer, the big mistake somehow. Okay, anyway, now I'm going to close the trades. Okay, and I will do an account history. Okay, much better. The only guess I wanted to attend as an extra to diversify my portfolio was negative, but was the less of them, so it was a kind of ranging phase. Okay, that could have been positive by the same value. Okay, the others are quite more significant of a permanent reading of the values that we may consider also in a separate profile of your MetaTrader, so that you can switch between a profile where you have the UFO and the other one where there is more a whole market analysis this way. So now I wanted to close the trades because some events now are making the currencies retracing somehow, and the goal is also to close the trades in a reasonable time with reasonable profit when you have it, and restart tomorrow reading the market performance and decide when or what to trade. I'm saying this because a lot of times we don't get the overall situation even if we have instruments, because there are other hands other than algorithms, hands that are manipulating the market. So leaving the money into the market for a long time, unless you are very covered or have different kind of policies, can be a negative condition, because it's very easy to be detected by positions that are taking longer than 1 or 2 days. And as Forex, it's a zero-sum game with a little bit of plus or minus. It's always very easy to get retraced, or to, after investing 1 day and having a profitable balance, we have to wait 2 days because there is a day of almost total retracement. Unless we have a plan of more long term, which is another story. So let's grab, for example, and now I'm finishing, but just to understand, if I can show you some values that can be, they should be anyway passed by the UFO first. Okay, so this is critical, but then from the UFO I can go to a graphical chart or to another mathematical chart. Let's grab some USD CAD, the one that was taken out from my picture here. So USD CAD was very nice, almost like this curve anyway. This is the market performance, okay, for the currencies that I decided to represent the markets. Okay, so we see a progressive and keeping in positions of strength situation of this currency pair USD CAD. And actually we have in the time frames here now is getting some negative reading, not 5 minutes ago, but yes, 10 minutes ago. And also we have decreasement at this level. We have an increasement on 30 minutes, we have an increasement on 1 hour, increasing, and now it's probably the start of the last 4 hours or 3, I don't know. So we are having a value that now it has to reveal at 4 hours. In the day we were oscillating, then getting a little bit of weak in the week chart, and from very negative to in 2 months before, and the month before positive, and this time still this month even more positive. So that could have been also a nice reading. I took other trades, other situations, because in the day before and in the reading this chart was not suggested, or I decided to avoid to trade euro, so to trade dollar and euro dollar, even if I think euro was something like 400. You can go back and check at the beginning of the video. So could have been also good trade to trade long dollar against, in this case, CAD. That was anyway one of my choices. Okay, so for each trade, for each currency pairs, there is a probability of trade that should be somehow taken by this computations, and the results of them that must be read in this way instead of having graphical things. Then we can do all the graphics that we want, but the moment we see a graphic, which sometimes are very important to do, they are always subjective. They're not objective. They must be interpreted accordingly anyway to a reading that is much more clear when it's related to numbers, because numbers are unquestionable. This line can be here or questionably here. So, and there's a lot of difference. Yeah, okay. So finally, anyway, this was the result, with some lost trades, of course, which are these, and anyway with the ending result of the choice of the portfolio of assets that have been put together in a hedging trade was this. Okay, bit of the beginning, and then a reading when the London session was opening or just opened, so anyway, around that time. Okay, so with this, it's over for now, and thank you for being so patient to arrive till this moment and following my explanation. And for those who have answers anyway, at least first take a look at some videos before where maybe you can find explanation on what I'm saying. This situation is under testing now again, but it's quite easy testing because it's always based on the same computations of the UFO. It has the core module of the UFO, so results are coherent, are like in-depth propagation, but the mathematical principles are the same that you can find in some webinars that I have explained the way I have an interpretation of Forex. And with this, I thank you all for watching, for subscribing, and for supporting this channel. And as usual, have a good time and a good space. Bye.